based out of the Buffalo Social Security office. There are actually 27 Social Security offices in upstate New York, and I work very closely with all of them, but my desk is physically here in Buffalo. I hope that you'll find the information that I present today useful and relevant. I usually recommend that you keep something to write with, a pen and paper. Just keep that handy because I'll be giving out some publication numbers and some form numbers and phone numbers and other information that you might want to write down if you need to go back for further assistance. I know we only have a short time for the presentation today, so you may want to go back and refer to some of the publications that I'll recommend. And I'll also just want to say that today we're going to give you sort of an overview of the various Social Security programs that you may be looking forward to, such as retirement, disability, survivor's benefits. And I will address what was alluded to in the beginning about Social Security increasing. And I think I'll save that towards the end of the presentation. Can we go to the next slide, please? So for more than 80 years, Social Security has helped secure today and tomorrow by providing benefits and financial protection for millions of people throughout their life's journey. Social Security touches the lives of every American, both directly and indirectly. So as you consider the information that you're about to receive, I encourage you to think about all the ways Social Security has been linked to your life and to the lives of your loved ones. When most people think of Social Security, they almost automatically think about retirement, and that's for good reason. Retirement is by far and wide the biggest thing we do, but Social Security offers much more than just retirement. In fact, we provide a safety net of financial protection for your whole family. We have a slogan at Social Security that we're here with you throughout life's journey. With retirement, disability, survivors, and other benefits, Social Security is here to help you and millions of others secure today and tomorrow. And can we go to the next slide? We should be on number 3. Looks like a set of steps. Social Security was never meant to be the only source of income for people when they retire. It was always meant to be just a base or a foundation to be supplemented with things like savings and investments, 401ks, IRAs, etc. That's what this graphic is demonstrating. You should be seeing what looks like a set of steps with Social Security as the foundation. For the average worker, Social Security replaces about 40% of their pre-retirement income, but financial experts say that you'll need 70 to 80% of your pre-retirement income to live comfortably in retirement. And next slide, please. Retirement planning is full of personal decisions, and there's really no one plan that's good for everyone. That's why we encourage you to visit our website and use our online retirement planning tools to plan for a secure financial future. You should be seeing the homepage for the Social Security website, which is a valuable resource of information about all of Social Security's programs, and it's accessible from a computer, tablet, or smartphone. Next slide, please. Should be on number 5. So you can use the online retirement calculator to get immediate and personalized benefit estimates to help you plan for your retirement. It's a convenient, secure, and quick financial planning tool. The retirement calculator is an interactive tool that allows you to create what-if scenarios. You can, for example, change your stop work dates or your expected future earnings to create and compare different retirement options. The calculator gives you estimates based on your own personal earnings record, and you can use this tool if you have worked enough and paid into Social Security long enough to be eligible for a Social Security benefit, as long as you're not already receiving benefits, because the calculator only works before you begin receiving benefits. Next slide, please. Another great tool available at Social Security's website is My Social Security. My Social Security is a convenient and secure suite of services designed to put you in control of your personal Social Security information, as well as help you manage your benefits when you're ready. Your account gives you information you need whenever you want it, all without calling or visiting a Social Security office. When you go to our website, you can create a My Social Security account for yourself, but just as a reminder, you cannot create an account for another person even if you have his or her written consent. And generally, it's easy to open an account, but you may run into difficulty or be unable to open a My Social Security account if you blocked electronic access to your personal Social Security information, or if you recently moved or changed your name, or placed a freeze on your credit report. Your online My Social Security account provides a variety of information to help you and your family. And if you need help setting up your account, we do have a 4-minute walkthrough video on our YouTube channel. And that brings me to a side note about Social Security's presence on social media, since I just mentioned YouTube. We actually do have a pretty active social media presence. We have a Facebook page, which is really popular. We have a Twitter account, and as I mentioned, a YouTube channel. On our Facebook channel, for example, you can read posts and ask questions, and a real person will address your questions within a day or two. So it's a good alternate method of communicating with us. And we do also have a blog called Social Security Matters, and you can reach that from our website's homepage. And next slide should be number 7. To open a My Social Security account, you have to be at least 18, have a valid email address, a Social Security number, and a U.S. mailing address. Just go to ssa.gov/myaccount and select Sign In or Create an Account. One way to register for an account is to provide some personal Social Security information about yourself and then provide answers to some questions only you are likely to know the answers to. These are just to verify your identity. There are multiple choice questions that we refer to as out-of-wallet questions, and that just means if someone stole your wallet, they could not use the information they stole to answer any of the questions. And then next, you choose a username and an 8-character password to access your online account. If you don't answer the multiple choice questions correctly, you will be suspended, but only for 24 hours. At that point, you can try again, and you do not have to contact Social Security. However, if there is a discrepancy in the personal information you enter and Social Security's records, then you will have to visit a Social Security office with your ID. And remember that no matter what type of device you use, the My Social Security portal will automatically readjust to fit the appropriate screen size, providing you full, easy-to-use access to your personal account. Next slide. So what can you do with a My Social Security account? Your online account provides a wealth of information to help you and your family plan for your financial future. If you don't already receive benefits, you can compare benefit estimates based on the date you select to begin receiving them. You can also request a replacement Social Security card if you meet certain requirements. You could check the status of any application or appeal that you may have filed. And maybe most importantly, you get access to your Social Security statement, which is that form you may remember that we used to mail out to virtually everyone every year. The statement shows your estimates of future benefits, and it also shows you your earnings history broken out year by year. Next slide, please. And then after you begin receiving your benefits, your My Social Security account becomes even more valuable, even more useful to you. You can use your online account to do simple transactions like changing your address, phone number, and direct deposit information. You could request a benefit verification letter. You could request a replacement Social Security card, replacement Medicare card, or a replacement tax form like the SSA 1099. Many, if not most, simple transactions are being moved to the My Social Security portal, making them kind of self-service. And we're trying to give you the capability of doing these simple things at home to save you the trip into our office, which is probably more important now than ever before. And it also saves you the time waiting on the phone on hold to speak to a representative. Next slide, please. Should be number 10. So you may be wondering, how do you actually qualify for retirement benefits? So you qualify for retirement benefits, by earning credits. These credits are the building blocks that Social Security uses to find out whether you have the minimum amount of covered work to qualify for each type of Social Security benefit. No benefits can be paid if you do not have enough credits. So when you're working and you pay Social Security taxes, You earn up to a maximum of 4 credits for each year, 1 credit for each business quarter. In 2023, you must earn $1,640 in covered earnings to get 1 Social Security work credit. And as I said, there's a maximum of 4 credits per year, so you need to earn just $6,560 in 2023 to get the maximum 4 credits per year. During your lifetime, you, like most people, will probably earn many more credits than the minimum number you need to be eligible for benefits. However, these extra credits do not increase your benefit amount. We actually use your average earnings during your working years to determine how much your monthly payments will be. And next slide. That's what the steps on this slide demonstrate. Social Security determines the amount of your benefit by using your highest 35 years of earnings during your working lifetime. Those earnings are then adjusted in wage levels over time, or in other words, your earnings are adjusted for inflation. And then we determine what your average monthly earnings were over your 35 best years. And then you receive a percentage of your average indexed monthly earnings. Remember I said on the previous slide that you only need 10 years of work to qualify for benefits, 40 credits, but we still use your 35 best years of earnings to determine the amount you receive. So someone who has more than 10 years of work but less than 35 years when they file for retirement would have zeros factored into their average monthly earnings. And we all know zeros bring averages way down pretty quickly. Okay, next slide, please. Now, remember, when to start receiving retirement benefits is a personal choice. There isn't a one-size-fits-all answer. You may begin receiving retirement as early as age 62 at a reduced rate, or you might wait until your full retirement age, which is based on the year when you were born. When we say full retirement age, we mean the age when you can receive your benefits without a reduction. This chart shows you what your full retirement age is and what the reduction would be if you begin your Social Security benefit at age 62 instead of waiting for your full retirement age. It's really the choice between a smaller payment over a longer period of time or a larger payment for a short amount of time. You should make an informed decision about when to apply for benefits based on your individual and family circumstances, and factors you should consider when deciding the best age to retire are things like your current cash needs, your health and family longevity, whether you plan to work in retirement, whether you have other retirement income sources, your anticipated future financial needs and obligations, and the amount of your future Social Security benefits. Besides showing you what your full retirement age is, this chart also gives an example of how much a $1,000 retirement benefit would be reduced if someone took that benefit at age 62. One thing that's very important to keep in mind is that although the full retirement age for Social Security has increased, the Medicare eligibility age of 65 has not changed. We recommend that you apply for Medicare 3 months before your 65th birthday, unless you're already receiving Social Security benefits when you turn 65, in which case you will be automatically enrolled in Medicare. And we're going to cover Medicare in a little more detail in just a few minutes. Next slide, please. Should be on 13. So choosing when to retire is an important and personal decision. As I mentioned earlier, financial experts say you'll need 70 to 80% of your pre-retirement income to have a comfortable retirement. So you'll want to make a retirement, you'll want to choose a retirement age based on your circumstances so you'll have enough income when you need it. And as you can see on this chart, your monthly retirement benefit will be higher if you delay starting it. We calculate your basic Social Security benefit, the amount you would receive at your full retirement age, based on your lifetime earnings. However, the actual amount you receive each month depends on when you start receiving it. You can start retirement benefits at any point from age 62 up until age 70, and your benefits will be higher the longer you delay. This adjustment is usually permanent. It sets the base for benefits you'll get for the rest of your life. So in the example on this chart, let's say your full retirement age is 66 and your monthly benefit starting at that age is $1,000. That's the green column in the middle. If you choose to start getting benefits at age 62, that's the green column all the way on the end on the left, we'll reduce your monthly benefit 25% to $750 to account for the longer period of time that you'll receive benefits. On the other hand, if you choose to delay getting benefits until age 70, that's the green column all the way to the right, you would increase your monthly benefit to $1,320. This increase is from delayed retirement credits that you earn for your decision to postpone receiving benefits past your full retirement age. The benefit at age 70 in this example is 32% more than you would receive each month if you had chosen to start getting benefits at your full retirement age. And here's one of those publications that I mentioned to write down. I encourage you to read our publication called When to Start Receiving Retirement Benefits. The number is 05-10147, and you can find it by searching our publications page at ssa.gov/pubs, P-U-B-S. Again, it's 05-10147, When to Start Receiving Retirement Benefits. Next slide, please. So we're on slide 14. When you get Social Security retirement or survivor's benefits and work at the same time, that's okay. However, if you're younger than your full retirement age and earn more than certain amounts, your monthly benefits remain the same, but the total amount of benefits you receive for the year will be reduced. If you're younger than your full retirement age, there is a limit to how much you can earn and still receive full Social Security benefits. On the top row of the slide, it shows if you're younger than full retirement age, we must deduct $1 from your benefits for each $2 you earn above the annual limit. For 2023, that limit is $21,240. And on the middle row, it shows if you reach full retirement age this year during 2023, we would deduct $1 from your benefits for each $3 you earn above the limit, $56,520, until the month you reach full retirement age. So from January until the age that you reach your full retirement age, you could earn $56,520 without a penalty. And then on the bottom row, it shows that starting with the month you reach your full retirement age, there is no limit on how much you can earn and still receive all of your Social Security benefits. If you worked over the limit in years prior to your full retirement age, the amount that your annual benefits are reduced isn't truly lost. Your monthly benefits will be increased when you reach your full retirement age to account for the months in which benefits were withheld. In other words, if some of your retirement benefits are withheld because of your excess earnings, then your benefits will be increased starting at your full retirement age to take into account those months in which you did not receive a payment prior to your full retirement age. And lastly, just a quick note that different rules apply if you work outside the United States. Since we're so close to Canada, this is a little important for us. Just contact Social Security if you're working or you plan to work outside of the country. We have a publication available for download on our website called How Work Affects Your Benefits. And next slide, please. So let's talk about how other people can collect on your record once you retire. Your child can get benefits when you retire if they're your biological child, adopted child, or dependent stepchild. To get child's benefits, a child must have a parent who is disabled or retired and entitled to Social Security benefits, or a deceased parent who was covered by Social Security. And the child must be unmarried, under age 18 or up to 19, and still in high school, or the child must be disabled from a medical condition that started before age 22. Within a family, a child can receive up to 1/2 of the parent's full retirement or disability benefit, and if the child receives survivor's benefits, they can get up to 75% of the deceased parent's basic Social Security benefit. There is a limit to the amount of money we can pay to a family. We call that the family maximum, and that can be from 150 to 180% of the parent's full benefit amount. If the total amount payable to all family members exceeds this limit, we reduce each person's benefit proportionately, except the workers, until the total equals the maximum allowable amount. And next slide, please. And when you retire, we may be able to pay your spouse benefits too. Your spouse would need to be at least age 62. If your spouse has not worked or has low earnings, he or she may be entitled to as much as 1/2 of your full benefit. But if he or she wants to get Social Security retirement benefits before they reach full retirement age, the amount of the benefit is reduced. The amount of reduction depends on when the person reaches full retirement age, just like how we covered the way your own benefits are reduced when you claim them before your full retirement age. Your spouse benefit is only payable if your claiming spouse's own unreduced benefit rate based on his or her own earnings history is less than 50% of your unreduced benefit rate. The claiming spouse must first file for their own benefit based on their own earnings history, which is then subtracted from the full spousal benefit. The benefit is unreduced if the claiming spouse is caring for a child who is under the age of 16 or who is disabled. And next slide, please. It's number 18, even though we skipped 17. You may receive benefits on your former spouse's record if the marriage lasted at least 10 years, you are unmarried, you are age 62 or older, your ex-spouse is at least 62 and eligible for Social Security, retirement, or disability benefits, even if not collecting. If the benefit you would receive based on your own work is less than the benefit you would receive based on your ex-spouse's work. And next slide, please. Number 19. So let's take a look at how people become eligible for Social Security survivors benefits. A child may receive benefits on a deceased parent's record if he or she is not married and is under age 18 or between the ages of 18 and 19 and a full-time student no higher than grade 12. A disabled child may receive benefits beyond age 18 if he or she is not married and was disabled before age 22. A widow or widower or divorced widower may receive full benefits at full retirement age or reduced benefits at age 60 or as early as age 50 if disabled, or at any age if caring for your child under 16 or a disabled child. I just want to point out that, remember, retirement benefits, the earliest you can get them is 62, but for survivors benefits that age is 60, so it's a little bit lower. The length of marriage requirement for a widow or widower to be eligible for benefits is 9 months, and for a surviving divorced spouse, it's 10 years. There are exceptions to these duration of marriage requirements, however, so I always say if you even think you might be eligible for a survivor's benefit, don't pay really close attention to these duration of marriage requirements. Just call us and let us make a decision and see if you meet any of the exceptions. And generally, you cannot get widow or widower benefits if you remarry before age 60, but remarriage after age 60 or age 50 if you're disabled will not prevent you from getting benefit payments based on your former spouse's work. Also, at age 62 or older, you may get benefits based on your new spouse's work if those benefits would be higher. And next slide, please. This one is number 22. Here are a couple common scenarios I'd like to highlight just because they're the things that we see most often. Someone collecting survivor's benefits at age 60 can switch to retirement on his or her own work record as early as age 62 if that benefit is higher than the surviving spouse's benefit. Or someone who is eligible for both a survivor's benefit and a retirement benefit on his or her own earnings can take retirement as early as age 62 and then switch to the surviving spouse's benefit at full retirement age if that benefit is higher, and vice versa. So I know these situations can be confusing when someone is eligible for both survivors and retirement benefits at the same time. There are many options that come with different pros and cons. So we do recommend speaking to someone at Social Security about your options if this applies to you. Next slide, please. We're going to talk briefly about taxation of Social Security benefits. This graphic shows the income brackets that determine if you will pay federal taxes on your benefits. If you file a federal tax return as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. And if your income is more than $34,000, then 85% of your benefits may be taxable. If you file a joint return and you and your spouse have a combined income that is between $32,000 and $44,000, you may have to pay income tax on up to 50% of your benefits. And if your combined income is more than $44,000, then up to 85% of your benefits may be taxable. And if you're married and file a separate tax return, then you probably will pay taxes on your benefits. But keep in mind, no one pays federal income tax on more than 85% of his or her Social Security benefits based on Internal Revenue Service rules, IRS rules. And at the end of each year, we'll mail you a Social Security benefit statement, Form SSA 1099, showing the amount of your benefits that you received. Use this statement when you complete your federal income tax return to find out if you must pay taxes on your benefits. You can ask Social Security to withhold money from your benefits to pay your federal income tax, and although this is not required, you may just find it easier than paying quarterly estimated tax payments. More publication numbers for you to write down. For more information, we suggest that you read Tax Guide for Seniors. That's an IRS publication number 554. And another one called Social Security and Equivalent Railroad Retirement Benefits, and that's publication 915. And they're both available on the IRS website at www.irs.gov/publications, or you can call the IRS on their toll-free number at 1-800-829-3676. I believe that translates to 1-800-Medicare. And just to note, on the 1040 tax return, your combined income is the sum of your adjusted gross income plus non-taxable interest plus half of your Social Security benefit. Next slide, please. So let's shift gears a little here and talk about Medicare. Keeping an eye on the clock, we're kind of running out of time, so I'm going to keep this part short. But I just want to mention that Medicare is our country's health insurance program for people age 65 or older. People younger than age 65 with certain disabilities or permanent kidney failure or Lou Gehrig's disease can also qualify for Medicare. If you're looking at this slide, and again, slide number 27, I want just to explain that Medicare has 4 parts. Part A is hospital insurance, which covers most inpatient hospital expenses. The coverage is free at age 65, and if you file early for retirement at age 62, you will automatically be enrolled at age 65. The coverage has no premium, it's free, but the 2023 deductible for Part A is $1,600. Part B is medical insurance, which covers 80% of doctor's bills and other outpatient medical expenses after your first $233 in approved charges. The 2023 standard monthly premium is $164.90. After you retire, your health insurance may require for Medicare to pay first, so many supplemental plans require you to sign up for Medicare Part B. Then there's Medicare Advantage, also known as Medicare Part C. You can think of it as a sort of all-in-one alternative to original Medicare. These bundled plans include Part A, Part B, and usually Part D. These plans may also have lower out-of-pocket costs and may offer extra benefits that original Medicare doesn't cover, like vision, dental, and more. And then there's Medicare Part D, which is Medicare prescription drug coverage. It covers a major portion of your prescription drug costs, your out-of-pocket costs, monthly premiums, annual deductibles, and prescription copayments. They will all vary by plan. You enroll with a Medicare-approved prescription drug provider not by contacting Social Security. Another publication, you can learn more with our publication simply titled Medicare. The number is 05-10043. To learn more about original Medicare, Medigap, or Medicare Advantage plans, you should visit Medicare's website and view Medicare's publication. There's one called Choosing a Medigap Policy, publication 02110, and one called Understanding Medicare Advantage Plans, publication number 12026. Okay. I also want to mention briefly that Medicare has 3 enrollment periods. The first one is your initial enrollment period. That's the month you reach age 65, 3 months before and 3 months after. So remember that although your full retirement age for cash Social Security retirement payments may have moved past age 65, this is the time at age 65 to enroll in Medicare. The second chance you get to enroll care if you missed your initial enrollment period is something we call a special enrollment period. You qualify for this if at the time of your initial enrollment period you refused Medicare Part B because you were already covered under a group health plan based on current employment of yours or your spouse's, and now that coverage or employment is now ending. You'll need to prove it when you're ready to enroll, and Social Security will decide if you meet the qualifications for a special enrollment period. So if you refuse Part B at age 65 because you're waiting for a special enrollment period, my advice to you is just to be very sure that your employment and your coverage meet the requirements for a special enrollment period. Some people do let that initial enrollment period expire, and then when it comes time to enroll, they find out that they don't qualify for the special enrollment period. So what happens in that case is you have to wait for the general enrollment period, which is always the first 3 months of the year, January, February, and March. And there's a penalty for each year past age 65 that you didn't have Medicare. So you will pay 10% extra on top of the standard Medicare premium for every year past age 65. And next slide, please. Just a quick note about scam awareness, because oftentimes when I reach out to a member of the public to conduct business, people sometimes say Social Security never calls people, but we do contact citizens by telephone, but generally only when we have some sort of ongoing business. Social Security employees will never threaten you for information. We will not state that you face potential arrest or other legal action if you fail to provide information. We will never ask you to make a payment over the phone, and we will never ask you to pay us with gift cards. In those cases, the call is fraudulent and you should just hang up and do not give out any information. If you believe you have been a victim of a Social Security Administration imposter scam, we ask that you report it online at oig.ssa.gov. Again, that's OIG for Office of the Inspector General, oig.ssa.gov. And also, just because I mentioned our social media platforms earlier in this presentation, I just want to give you a word of caution about interacting with us on social media. Always look for our official seal and a paragraph that explains that this is the official account of the Social Security Administration, because there are fakes and lookalikes out there, and I want you to be sure that you're communicating with Social Security when you look for Social Security information. We will also never ask you for personal information or any form of payment for any services when you interact with us on social media. And next slide, number 36. Getting kind of close to the end of my presentation, I just want to mention that you can apply for your Social Security within 4 months of when you want your benefits to begin. You have 3 options when it comes time to file. You can apply online at ssa.gov. This is still by far the most convenient way to apply. Or you could call Social Security to schedule an appointment to apply over the telephone on a day and time that is convenient for you. or you can call us to schedule an appointment to apply in person at your Social Security office with a face-to-face interview. Just to note that you cannot file online for auxiliary child benefits or disabled adult child benefits or survivor's benefits. And a reminder that applying online is still the most convenient way to apply for benefits. You can apply for retirement benefits in as little as 15 minutes. And next slide, please. This is the question slide, number 37. But before I answer questions, I just want to address what we said at the beginning about the cost of living adjustment. And it is true that Social Security beneficiaries almost, and I say almost, always receive a cost of living adjustment in January. This is set by Congress. Congress always decides based on the consumer price index what the benefit will be or what the increase will be. This past year was unusually high at 8.7%. And as I said, it was based on inflation. And we all keep hearing in the news that inflation is very high. And that explains why the cost of living adjustment was higher. I always like to mention that it really is not a decision that people make. It's really determined by the numbers and what the economy is doing at the time. But this year was high, 8.7%. So we'd like people to be aware that it can actually go as high as that. There have been years in the past where there was no cost of living adjustment because inflation was unusually low. That doesn't happen very often, but it does happen. And looking at the time, I think we do have time for some questions.
Hey. Okay, thank you so much. So if anyone has a question for Ben, we can do it one of two ways. First off, I'm going to stop recording for the question session. So I'm going to do that real quick here. And okay.